Hey traders, hope you guys are all doing great this weekend. So I just want to give you guys a little bit of source, and I want to show you guys the exact reason why I entered this trade on Bitcoin. Now this is just a very small account. I put in $25 and I've already grown it to, by $10 on this trade basically. I am going to close this trade out now because I can see it's going to probably reverse from here. So let's just close this out. So that's a quick $10 on that trade. So basically, where did I enter? Roughly around here, 274. And my stop loss was down here, so I was risking $4.80. And I made $10, roughly $10. So it was a good 1 to 2 risk to reward trade. Now this trade may carry on going all the way up, but I'm not going to risk that. I'm just going to call it quits over there. The reason is, as you can see here, it's knocking its head on this order block over here, or this last little candle over here. So it's reversing from there. If we look at the 1 minute, clearly reversing from there. So as you can see, price is always reacting to levels and little things, order blocks in the market. But I just want to show you the reason for entry on this trade. So I'm going to take you over to TradingView and show you the thinking behind the trade and how you can also get into these trades quite easily by just setting alerts on your chart. Okay traders, so here on TradingView I'm just going to show you the exact reasoning as to why I took the trade. Now you might also be wondering why I'm trading with such a small account, and that is because I recently took a $50 account all the way up to 650 and I withdrew 625, and this is why I'm starting again with $25. So I did that over a week and a half trading gold to scalping gold. But I'm starting to, my bloody, it was quite tiring doing that. So I'm looking for better opportunities like this and just taking less trades. And I just want to show you guys how you can find these opportunities on a weekly basis. If you're looking at a few different pairs, you'll find 2 or 3 of these setups a week across those 2 pairs, or if you're looking at multiple different pairs, you'll find more opportunities. But anyway, with this trade, I'll just show you. If we look at the hourly, we are on a bit of a downtrend. Okay, on the 4-hour, we've made a nice push up. This is a bullish engulfing on this 4-hour, so it looks like there is potential room for this market to go up. I know this is a counter trend trade, but I'll show you the reasoning why I actually took it as a nice little day trade. It's not necessarily, I'm never looking to get into a market and ride it to the moon. I'm just looking for movement in the market. I'm looking for areas where price will bounce from, because it's as simple as this: where there's movement in the market, where there's reaction, should I say, there's movement, and when there's movement, there's money. So reaction equals movement, movement will equal money. So basically I saw price building sell side liquidity, or should I call it buy side liquidity, throughout the day. You can see market makers have been pushing down, and they've also been tempting retail traders to go long with these pin bars and with these bullish candles over here throughout the day. So it's like a descending channel that they've created. Okay, so obviously they're building liquidity to the downside, and then I saw this candle over here. Which was a major liquidity sweep. Okay, major liquidity sweep over there. That's a liquidity candle. That's a sell to buy candle from big institutions or big banks. Now, whenever I look to take a trade, I'm always looking left. I could also see this liquidity needed to be taken out over here, because there's tons of buy orders below here. Okay, so I wasn't prepared to take any trades from anywhere, within this box over here, because I knew most likely with the way that price was looking throughout the day, it was most likely going to go down and scoop that liquidity. So once it did that, I looked left, okay, and I saw this big imbalance. If we look on the hourly, you can see it more clearly. You can see this big imbalance over here. This big imbalance. You can see in the 15-minute, you can see that as well. Okay, so I knew that price was most likely going to come down and scoop out this imbalance first. And we can also see an order block that it bounced off of. If we zoom out a bit, we can see this order block. So price basically, with this liquidity candle, came down, scooped up all this buy side liquidity over here from these guys who are long from here. Okay, and also reacted to this order block. We go down to a 5-minute, you can see it a little bit more clearly. You can see they took out all this imbalance. Okay, so all these, this buyer, whoever this was, is basically, this was a massive buy trade that they took, an institution, and they are defending their position. It's just a theory, I guess, but it looks like, big institutions who buy from certain levels, when price comes back down, they will buy again and defend their positions. But you can see here it was bouncing off this point of interest, or this major order block over here. So I was looking for price to take out all of that imbalance and then react to that order block, which it did. I was looking at this on the 15 minutes. I saw this big liquidity sweep, this liquidity candle. Then I saw this pin bar over here. Where's this pin bar over here, which confirmed that it was bouncing off that order block. Okay, and then I basically entered down there, and I was just aiming for about that area over there. Also, guys, if you're looking for a really trusted and reliable broker to use for your trading, with really tight spreads in gold and the Nasdaq and all the major instruments, click the link down below in the description and sign up with Vantage Markets. Really awesome broker. I've been using them for over a year now. All my withdrawals have been processed, and whenever I've needed help, there's 24/7 chat, online chat, on their website. If you have any queries or questions, and they're easy to contact. So if you really want an awesome, reliable broker, use the link in the description and sign up with Vantage Markets. So this is kind of like what the trade looked like. It was actually like a 1 to 3. If I lower my stop, it was basically a 1 to 3. And the reason why I pulled out over here, this is some more source fears, because you see here, price basically reacted to this previous low. So price is always reacting to previous levels and levels that it's basically heading for. You can see on the 1 minute, it came to that level and reacted to that level and dropped a bit. All right, so it was, price will always struggle to break certain areas where it's already been. If we even look here, if we put a crosshair to this, let's just drag this across. Let me just see, wait if I can. If we just drag this across from here to here. Okay, now let's go look at the 1 minute time frame. Let's remove that one. You can see price came up to that previous wick on that candle on the left a couple of days ago and reacted to that. But you can see price is really struggling to break this level higher that I marked off. And you know, if that's why I wanted to pull out, because I don't want to sit through all this drawdown, and it may potentially, you know, come down even lower and then move up, and I don't want to. I was already up like 30% on the account, so I'd rather just take the profit. But if you are trading a 1 minute time frame and you're just looking for a nice scalp, like this could have been a nice scalp, right? So as I said before, reaction equals movement, and movement equals money. You could have taken this after seeing that pin bar over here, had your stop just above here, and just gone for a quick little 1 to 2 or something like that, even a little 1 to 1.5, taking that as a nice little scalp on the 1 minute. But that's all about, even you can see here, it filled this imbalance, the sell imbalance, the sell liquidity candle, and reacted. Now, what trading's all about, in my perspective, is all about understanding how the market moves, understanding, you know, the market structure, and understanding where there's going to be reaction from, where is there going to be movement from. And if you get confirmation of it, like here we get the confirmation, then it's really no gamble to take a trade from there. Even if you lose it, there's a high probability chance that there's going to be some kind of reaction, and you'll at least get the opportunity to put your stop at break even, you know, or take a 1 to 1 or 1 to 1.5 and scale out of the trade, leave a little bit on to run. But you can build your trading account quite quickly just by taking little day trades or scalps like that, high probability scalps, just by understanding the market structure and how price reacts and how price moves from certain areas. So it's all about knowing how to read the markets and knowing how to take trades from areas that are, you know, where price is going to react from. Simply, just as simple as that, taking high probability setups and growing your account like that. And, you know, it's not actually hard. You don't want to just be randomly taking a trade, you know, like as the market's dropping over here, because it's not going to be reacting to anything here. You know, it's just going to carry on freaking going. You know, if you see a lot of liquidity, you know, rather wait for that liquidity to get taken out and for price to fill an imbalance or react to some kind of order block looking left. Like, we don't see any order blocks here looking left. We go down to a 5 minute, we don't see a major order block. We can see that price has, well, look at this, price has already reacted to this order block. We look here, here's a buy imbalance. Price came up, back down, filled this imbalance and reacted to this order block over here. That's why it shifted up. You know, so if price has already reacted, you cannot go again. It's not most likely never going to just react again from that place. That's why during this downtrend, I was not interested in taking any trades until the major imbalance looking left, which was this one here, got taken out, and that fueled the move to go up. So what I would do is, guys, set alerts. Like if you thought, okay, cool, this is an area, like I thought, cool, this is going to react from there. What you do is you set an alert. So you just come to the side here, add an alert, then wait for price. Don't look at the markets or anything like that. Wait for price to come down to your level or your order block, wherever you think price is going to react to. Wait for that alert to pop up on your phone. Get set email alerts on TradingView. Then once it alerts you, then you can look at the price action and see, okay, is it reacting? Are we getting pin bars, engulfings, double bottoms, things like that? And then you enter. So set alerts at levels. Don't just randomly trade throughout the day, every little squiggle, every little move, because that's how you're going to lose money. So I hope you guys learned a little bit from this. Just understand reaction equals movement, movement equals money. Have your risk calculated. don't ever risk more than, I'd say, 5% of your account per trade. If it's small, as it grows to maybe 1,000, then you can risk obviously less, 2%, because you don't want to get emotional. As long as you know from a risk perspective that you're only risking 2%. So as your account grows, you want to start risking a bit less. But when it's small, obviously you can risk like 5%, 3%, things like that. It's just small, so you don't have to get emotional over it. So if you have any questions, leave a comment. I'll catch you in the next one, guys. If you're looking for a good broker, click the link down below. You can sign up with Vantage Markets, really good broker for scalping gold. The spreads are super tight. And yeah, really, really good broker. So sign up with them. Affiliate link is down below. So please use that link. Anyway, guys, have a good weekend. Cheers.